where I share my 44 years of experience, help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to be going through a recap of Q1, which was an amazing quarter to start the year, and we're going to look forward into Q2. So let's get this video going. Okay, folks, a lot to talk about tonight. We have a number of I guess, amazing things that happened in the first quarter. And I'm looking at the possibilities here as the markets start to unfold already this month, the whole day, right? April Fools. And so what we're basically going to look forward the best we can. I want to go back and review some things that happened. I've been talking to you folks since the beginning of the year that we're seeing the database look forward into at least July, and it seems to be pretty incredible because I'll show you in a minute, we got more traction in the intermediate database. Now we pushed up to almost 89% bullish, which is right at the peak. I think the highest I've seen it was after 2003. It got up to 89%. So more on that in a little bit here. But let's just talk a little bit about what we saw in the first quarter. You know, I think the big talk on the street is we went from the Magnificent Seven to the, I forget what they call it, the new four, right? Which is all the chips, NVIDIA, and we continue to see the chips just really roar in here. And that is because they're building data centers everywhere. AI is like a real thing. People like to call it as a bubble of some sort, but it is a very big event in human history as far as I'm concerned. And I talked about this. I'm always referencing back to my annual report I did on December 29th, my outlook for 2024 and beyond, actually. And you'll see here when I go through the analysis, it's amazing the targets that I'm going to talk tonight about on the S&P, and we'll bring up some of the numbers. I don't have the capability of doing some of the longer term forecasts on the NASDAQ. I don't believe there's enough data out there to actually use the algorithms and things to predict this out. But there's some really big numbers coming up here, and it doesn't seem like it wants to end. You can recall back going over a year ago, and I was telling you there's not going to be a recession. We saw a continuing ISM manufacturing actually went from contracting to positive, not a lot, 50.3 in today's report, but nonetheless, we're not seeing anything that looks like a recession, and we're not going to see anything that looks like a recession, I don't believe. And I know a lot of folks are still talking about that stuff, but those would be most of the folks that missed the market last year. And we're continuing to see some amazing not only performance, but traction in our database, which to me, I've been watching every output of every week since, I believe 1998 was the first time we had this process running on a regular basis. So we'll take a look at everything today and try to break it down. I'm just looking at a couple of things I'm going to mention, and I'll try to go through this tonight. We're going to focus mostly on the long-term nature of and looking forward into Q2 and probably touch a little bit on expectations even running further than that. Since we do have a general election this year, there are some characteristics that tend to happen during these type of years. But I'll also discuss a little bit about asset classes and potential rotation that we're likely to see. I'll just put it out there at the moment that a lot of folks are talking about the possibilities of, the Russell doubling in price. I don't see that. We are seeing some interesting movements in interest rates, a lot of things going on. We had PCE numbers come out when everybody had their eyes closed. They actually came in a, I think, 2.8 level. So it wasn't any really big surprises, but the markets were just kind of coming into the first day of the new quarter, new month, as really not really protective. It was kind of just a grinding kind of day, the way I saw it. We had a little selling come in, then there just seemed to be a fair amount of support, but no real interest in doing anything. So let's do this. Let's go real quick into the WaveTech database, because as you know, this is what drives most of my analysis, especially as we look into the intermediate. This is, I think, amazing. There was not a Substack last night. I apologize. The long weekend it just didn't happen. Okay, the holidays were the holidays. So I will go through. I'll run some AI on the forward-looking process from the standpoint of what the expectations are, but I'll use what I had in the last update, which was a couple of weeks ago. It hasn't changed at all from that point, but we'll talk a little bit about those things. Yeah, we can definitely, we'll look at oil. We'll definitely do that. So, yeah, hyperinflation, not a chance. Yeah, so let's get into the database. So I find this pretty amazing as we look at it. 88.54% bullish right now. We did have 504 new buys and 124 sells, so a positive rotation. You'll see on the screen here when we look at the weekly 1, 2, and 3-2 models, both a bullish ratio. They're not big numbers because right now we're along 13,488 symbols of the 15,234. So obviously 88, almost 90% of all of the symbols are long. So everything's long, and some folks would say, well, maybe this is overbought. I don't believe that's the case. But what we're going to go through tonight is I will look at the sectors and try to just talk a little bit about this. And I usually cover this in my Substack in detail, and I will do that in tonight's report. But what we're looking at here is only a couple conglomerates, and there was one other. Yeah, really, conglomerates is the only one that is really kind of long in the tooth, but it's still under its average holding period. If you notice, I'll highlight this number over here. It's 344 of 427. These numbers over here are the expected duration of these models on a sector level. We could break down into groups and go down to each individual stock in the database, but I'm going to just do a high level of expectations here. So you can see some of the returns on these. We're 80 days into the basic materials. We're already up 19% on a sector level. We're up 13% on capital goods. And we go down, the only negative right now is consumer non-cyclical. That's only been long for 4 days. So that came in last Monday. So we haven't run, the database has not run at this time. So tonight when I go through the Substack, you'll be able to get to that. And if you're not familiar with the Substack newsletter, you can go to kendallreport.com/newsletter or Substack or kendallreport.substack, and you can sign up for a free trial. It's $8 a month for the premium information, but it's really useful, and it's a lot better than trying to get the macro analysis out of my typical hour-long videos. And I suspect tonight we'll have plenty to talk about here. But the database itself is still looking forward quite some ways. In fact, the numbers that I was looking at from the standpoint of last time I suggested, we're looking at these numbers carry us into February of 25 and possibly into March if we just hit the average number, which is around 401 days looking forward. And these are market days, not calendar days. So we've got quite a bit to look forward to from the standpoint of what expectations and holding periods. Now, it doesn't have to, and I've actually estimated the February number that I just mentioned. That estimate is actually only getting about 80% of the duration as far as the holding period goes. So we'll adjust that. Sometimes it can be in the 60 percentile range. And we'll just watch this as we get developments, and we'll start to see some sort of rotation from the standpoint, and maybe this conglomerate starts to rotate over from that standpoint. So we'll go from looking at the sectors. Let's go back into looking at the database here, and this is important to understand as well, is that over on the right-hand side, there's expected duration numbers. So if we come over here to the weekly, I'm going to highlight this. Well, I can't highlight this one column here, but we're looking at right now, the average days long is 203 sessions, and we're looking at right now, the current duration fulfilled is right at 52%. So we're about halfway through this cycle, but this thing can actually, the database can actually recycle, and we start to get some reasonable rotation here where it will refresh this days. We'll start to see at some point that the negative rotation will start to come in. We'll see some backing up of this database. By the way, I have been talking about the potential for the database coming off these high levels for weeks on end, and it doesn't happen. The daily database, you'll see in a minute, it's moved up. Let's go ahead and take a look at this. I'll put it up on screen here. But we click over to the daily, and what we'll see here is we're now back to 59.43. We got down to about 52%, and now we're seeing it rotate back up, 59.43. We got 1,267 new entries for today's open on Monday, and 211 sells. So big rotation back into the market again. And we're just seeing this. I've been telling you that this is actually very healthy on the shorts. What we see as you go through the database, you'll see this rotation happen on a short-term basis, and it's basically the background of what's going on with the intermediate holdings is really just kind of adjusting, maybe sideways action to slightly down on an intermediate pattern, but it doesn't actually trigger any kind of sells or exits, and the markets are refreshing as they go through that. So the way that when I go through the database, so you understand, this is a refreshing. We went down to 52. I told you we had to hold like 48, 42%. And we went down to about 52 is all. Now we're back at 59. So this is just a real healthy rotation of stocks. And a lot of times, folks, I've seen emails and other things and tweets and what have you, responses, is right now, just to give you an example, I'd have to bring up, somebody says, well, you don't tell us where the rotation's happening. Unfortunately, there's so much, this database is so large, it's almost impossible to target any symbols at the moment. I could go and bring up the CSV files, and I'll show you where the transparency is on this, and we can just come over here, and I can click on this. I'm clicking on the model 1.2A long, and what's going to happen is it's going to put up all of these symbols and tell which ones are buys and sells. So the full transparency is here, but it's just really large. And I've been really telling folks, if you're going to be around the market right now, even though we're just grinding up here, you should have some kind of sell discipline. The fact is that when you get to this 89% bullish, you're going to see some rotation. You're going to have stocks that are will be exiting, and if you're trading some of these stocks, you need to have that. So once again, this is like $97 a month. It's probably worth having for the next quarter, just so that you have a sell discipline around and you can watch these stocks. You can build all kinds of watch lists and portfolios and what have you. But I'm just promoting this because this is the only way. I tell you, I'm going to help you with the management of your portfolios and protect your wealth. This is where it's done at. There's no way for me to individually just talk about indexes and what have you. Maybe that gives you some good guidance, but when you get down to individual stocks, individual stock volatility is the biggest thing. So if you are interested, it's kendallreport.com/wavetech. You can find out more on how to get started. So let's go ahead and move on, and let's start to get into some of the long-term analysis of what's going on with the S&P. I see some questions here coming up about XLE. I'll see if I haven't looked at the XLE hack that we did, but I have seen that the oil stocks have been performing pretty well. And so we'll try to touch on everything. We're about 15 minutes into tonight's broadcast, so we're going to start with the S&P and the indexes, and then we'll delve into some of these other back commodities, such as, we'll probably touch on gold and oil in tonight's broadcast. So let's go ahead and get into the S&P. Okay, so I'm going to start, and I'm going to go top down with the S&P, and there's some huge numbers I'm about to expose to you, and you can see the green Fibonacci targets above. And I'm going to start with a 3-month chart. So this is a very long chart. What you see on the screen right now is probably taking you to about the 1986 or so. I've got a little bit more on screen. I'm going to see if I can get this so it all shows up on here. I'll have to make this a little smaller. There we go. Yeah, so now you're seeing all the way back to 1980, and it's just a flat line because of the scale. But what we want to look at here is a couple things. I remember doing the first full day of every new month, I go through this analysis, and I remember talking about the quarterly then. If you look, the quarterly target on the upside last month, as far as the market grid goes, was the extreme was 50 to 59, and we actually went out at 52.54, so we came just close to getting an RTX sell signal on a quarterly. But if you look at this upward slope of let's just blow this up so you can see it. You look at the upward slope of these moving averages, you can see the market grid is up quite a bit. If I bring these Fibonacci targets, the very first Fib target on this pattern is 61.18. Now this is a quarterly chart, so this could be well into 2025. And if you look at that forecast that I did as far as the longer term 25, 26, and my whole hypothesis around the increase of productivity, primarily to the increase of the use of AI and everybody starting to benefit in 25 and 26. These are minimal targets, and most of these targets I'm showing you right now are way, way off into the future. So nothing is going to get hit anytime soon, but these are long-term targets. And I know I discussed these in my December report that I put out. So these are important numbers to look at. So let's go back to full screen, and what we're seeing here is this trend maintenance mode. We're seeing a zigzag formation. It looks like we could see momentum flatten just a little bit. So it's possible that this next quarter in Q2 could end up being a slight sideways pattern from the standpoint of the configuration here. So that's very possible that this second quarter could end up to be somewhat of a consolidation of the gains that we made in Q1, and that is possible. So let's go down the scale now, and let's go to a monthly chart. So monthly had some interesting targets as well. We went back in February, and I always mention this when they come up. The fib target in February was for 3 targets, 52.19, 56.45, and 59.08. So we satisfied fib target 1. You can see the upward slope again. Let me just make this full screen. You can see the upward slope from the standpoint of what's going on here with the market grid is just a vertical pattern that's coming up here. We're looking at the monthly market grid now. It's over on the far right hand side. You're looking at 53.10 is R1, so that hasn't quite been hit. What was the values today we got out? Yeah, we only got up to 52.65. This is cash markets, not the futures, by the way. So as we look at the next level, so 52.19 has been met, and the next level will be 56. So that's 400 points from here, and that would be fairly easy to satisfy from the standpoint of the range that would be expected for this month. And I've talked a little bit about this. I've actually worked on a video that we're about to release out on the channel. But what we're looking at here is the concept is that each bar will overlap itself, and that the ranges tend to normalize or be very similar to each other. If we looked at the ranges for the last 2 months, we're continuing to see this expansion to the upside. Now the PPMs on PPM1 is looking down, PPM2. All of these, though, are very accelerated. Right now, the value of PPM1 is 1.70. So this is in what's considered to be the extension phase of the PPM from the standpoint of a momentum. So we're looking at the extension of this pattern going up, probably above and probably hitting this second fib target, which is up at 5,600. 400 points from here, folks, is nothing, okay? That's not even a big deal. As we get higher in the scale, all of a sudden 100 points becomes obviously less and less of a percentage. So from a percentage basis, these are not big numbers I'm talking about. So that is really what we're looking at for this month, more stability. If you wanted to look at the market grid here for a second, you're probably looking at worst case right around S1 51.98. That would be around 5,200 would be your extreme. We could, if we extend it, it'd be 51.25. I don't see that happening. And we're looking at R2 right now monthly. This is cash, by the way. Remember, these are cash markets we're looking at. They are 53.73, and then the possibility of R3 for the month of April would be 54.36. So these are all big time numbers from the standpoint of what's going on with the markets here. And going back to what I was talking to you about as far as the database goes, the forward-looking database on literally 13,000 symbols, not on a couple. I know folks like to tell you that, you know, the Magnificent Seven driving all of it. There are lots of stocks. There are many, many stocks participating in this rally way beyond, and there are symbols. I think I did a couple weeks ago on my Tuesday live stream that I focused in on stocks. We looked at, I think it was bots or one of these ETFs that we broke out, and there was a stock that was way bigger performer than even NVIDIA in there. So there's a lot of stocks that are really performing quite well. So we go back to the charts, and what we'll see here let's just start breaking it down. Let's get into a weekly mode now, just so we can see a little, trying to get into the finer part of the analysis. So long term, we still have lots of upside, 5,600 plus, we'll say. From the standpoint of the weekly, we're starting to see a bit of a roll from the standpoint of it's starting to flatten out the momentum. All that means is that we're going to flow along this 10-period moving average here, which is right now 51.18. Once again, I'm looking at cash. I know normally I cover the futures on this channel, but tonight, to do the long term, we're going to keep everything in context with the cash S&P. And what we're looking at here is you can see the momentum is looking to bleed off. My best estimates here that will hold along this 10 and this 10-period moving average 51.18 will range in here as far as the weekly goes. We'll probably go into this sideways type pattern and then maybe see some downside, but the 21-week moving average will be rock solid if we do see it print down that level. That's quite a ways down right now. That's on the cash, that's putting us down around 50.17. I just laid out some of the numbers I think are going to be important for this month. So I don't think we'll see that type of scenario on the downside, but we should continue to hover along there. So I'll touch on the dailies just so we can go all the way from top down, from 3 month down to the daily. Daily is still got some upward slope here. I'm just trying to scale this so you can see this chart a little better. But you can see here the upward trajectory has just been vertical, and it's just been that really choppy. This has been the pattern I've been talking about over and over from the standpoint is you get these 3 bars down, then you get 3 bars up or 2 bars up. Here we got 3 down last week. We got a couple bars, maybe a bar down. But these markets are pretty much vertical at the moment. And I see somebody calling for a rug pull. Listen, those things at these kind of levels can happen at any moment. And that's why I'm suggesting you should have a sell discipline, and you should be, meaning that our database is going to detect these movements, especially on the daily charts. It'll start to pick up on any of this micro movement that starts to happen. At the moment, it's still getting traction. Everything looks reasonably healthy. I don't believe, looking at the news and things coming out this week, there's much of anything that's going to likely throw us into some kind of big scenario, unless there's, other than black swans. I mean, we knocked an entire bridge down and shut down one of the major ports in the country, and that didn't even affect anything. So, I mean, I don't know what is going to stop this market. One of the things I keep talking about is that there is a huge contingency of new people in this market. All you have to do is look at the volume between 2019, and then coming into 2020, and you see a huge increase in daily volume in the markets. It's been about 5.5 times what it was in 2019. So there's a lot of players. There just seems to be a cash flow that keeps coming in. And all you'll hear from, if you go to the talking heads, go to CNBC, those kind of things, what you're going to hear is that there's still all kinds of money, trillions of dollars in money market funds. So there's plenty of money to come into the market. I do believe that what we need to do is look at where the cash flow is going to come from. But right now, there's no reason to disbelieve in the markets. Now, like I said, when you get up into nosebleed area where we're running very near an all-time high, any of these reactions can happen. But for the most part, the downside looks like it's very defined. So let's move on. Let's go into NASDAQ, touch on probably the monthly. I'll see if there's enough data for quarterly. let me bring up NASDAQ on this screen. I've got the algos fixed, so it will work a little better. Let's go to, so there is enough data to get at least somewhat of a fill. I can't really get the algos to move, but here's some interesting numbers. Let's just go with the Fibonacci targets that are on this screen here. And you can see there's 3 of them, and we're looking at 21,431. The extremes would be 25,613 and 28,197. That's up here. But this is a pretty decent number. This is a quarterly chart. We look at the market grid on here. There's some reasonable numbers that are coming in here. We just look at for the quarter. Now this is to get into June, okay? And this is the futures that we have up here now on the NASDAQ. You're looking at R2 19,221. We're currently trading 18,470, 479. So those are very big numbers. You start to look at that. R1 19,015. R2 19,621, and then 20,000 on R3 20,026. And I remember people talking about when NASDAQ printed 5,000, then it collapsed in the .com, that it was never going to go up again. It's what, 4 times that of value now, but a lot of things have changed from there. Thanks for the slam on the boomers. But anyway, yeah, maybe it was, and market certainly thought it was no big deal. But let's take a look at the from the forecast of the quarterly. Let's scale it back and let's go to monthly. And let me just bring up the algos. Still look like we got a pretty good chance at the markets to move higher in the monthly. We're looking at let's look at the market grid here. R2 19,000. Like I said, we're trading 1880 right now. Is that right? Yeah, 18,475. So that would be a reasonable expectation. Last month's high was at 18,709, so we would expect, I'm just trying to get these numbers so I can see them over here. Yeah, so S1 would put us into a new high, I'm sorry, R1 would put us in a new high, 18,778, then 19,011. Those are reasonable targets. Probably S1, 18,221. And S2 17,938 are going to be extremes on the downside. They're really, this pattern that's here is just very, very bullish. We had these fib targets up here at the top. Let me bring that up so you can see it. They're no longer, they stopped calculating with this breakdown here, but I believe they're still valid. So you're looking at that 20,798 number, which came up on the quarterly chart. So let's go ahead and just hit down on weekly. So weekly is suggesting, as with the S&P, that we're likely to see some kind of loss of momentum, probably test the 10-period moving average. My scenario is that we probably spend the month of April and all these indexes consolidating the gains that we saw from the patterns of the first quarter. So we've got a lot to do from the standpoint of consolidating these gains. And I think what I'm expecting to see at some stage, and this is what I've been alluding to, is that we'll get some kind of backfilling on the intermediate database, goes from 89 maybe back to 78, 72%. I'd love to see at least 20% of these stocks peeled off, profits taken, patterns start to set up to show that consolidation. Right now we don't see it because everything's still pinned at the top, but I am somewhat, I've mentioned this before, that I think as we come into first, second week of this new quarter and month, that we're likely to see some retracement and some selling to come into play. But we still have a lot of active upward targets that need to be met yet. All right, let's go to the Russell. So we'll go into the quarterly on the cash. Don't have enough to calculate the forward-looking, not enough for the machine language. And I've even got this, I believe, where the coefficient's set to 50. Yeah, this chart is set to 50, so I can't get it. But we're seeing that the big reversal in October, which at the lows, this is quarterly now. First quarter, we followed through. We're looking at the market grid here. We were projecting R2 2277, R3 was 2358. We got up to 2135. So we didn't quite get up to some of those numbers. I'm just looking, yeah, R1 2196. So this is somewhat of this is a quarterly chart. We've been locked in this range for a while, even though we got a big reversal. By the way, this was the 3-bar trade that I talk about. This is the reversal, closed higher. We made a new high. We closed higher again, did not make a new low. So in theory, we should have 2 more quarters up in this pattern. And ultimately, we're going to have to challenge some of these highs that we made way back in 21. And, so this pattern still has to evolve here. Unfortunately, not enough here for the algos to kick in, but let's go to the monthly. Monthly looks like we've got a pretty good chance here at continuing this upward slope. We should, like I said, with all the indexes, we should get a bit of consolidation and then start to see the market move up again. But this slope here is projecting higher prices. It's not until June that we're going to see the 10-period moving average cross over the longer term averages, which is somewhat of a positive, but that's months away. Let's go to the weekly. Weekly's got a decent upslope here. The angle of attack is pretty good. The PPMs are still in very positive range. And we're just looking at really more of the same of this steady climb up, but the big numbers are on the quarterly and the monthly charts. We've got to challenge those old highs, those 21 highs at some stage. I just don't see the big explosion at the moment, but certainly a lot of these stocks are coming into play. If you think about it, we've got a database of 15,000 stocks, 13,000 of them are long right now, so plus 13 plus. That means that a lot of mid-cap and small-cap stocks are important. So let's go through something I mentioned in the beginning of the video that I would cover. We're at 38 minutes. I'm probably going to come up short on getting through everything I want to do, so we'll follow through on tomorrow's video. But the realities here are that all of the indices are in pretty steady uptrends. The momentum is there. Everything's there. Doesn't mean we can't retrace back into some of these support levels that I talked about. This is a larger trend view that is unfolding here, and it's not likely to change. And these things don't change very often, especially these 3-month trends. And I remember going back several quarters ago doing the 3-month and telling you folks that we were looking, positive well into 2024, which was just nothing but a dream at the time. And now here we are, and it's doing exactly what is basically was predicted some time ago. So let's go ahead. Let's do a couple things. I'm going to bring up we went through the Russell. I want to bring up one more thing here. I want to see if I can find something here real quick, so bear with me just for a second. So I'm bringing up the Midcap here, and this was, I wish I had a split screen because you can see the difference. This has been, I've been telling you folks throughout this whole, since the beginning of the year, that this is the place. This is a weekly chart that I have up here. This is where you're going to get a lot of overperformance. This is way outperforming the small caps, and I continue to believe that the mid caps have fewer issues around financing, but more importantly, that these folks have a better opportunity to participate in some of the advances and productivity gains that are likely to happen from AI. So this is why I continue to push this. There's still a big move to the upside, no doubt. The algos here as well are suggesting some flattening, but this upward attack, the angle of attack and the trend is still very valid, and maybe we pull back to some of the support numbers, but this is, to me, this is the secondary, this is the chart that you should have been watching. If you look going back to maybe 6 weeks ago, this index was only up about 3.5%. It's now up closer to 8 or 9. I didn't look at the exact numbers for today, but it has moved up substantially. It's just lagging the NASDAQ and the S&P by a little bit. So let's do this. Let's go through interest rates. There's some big stuff going there as well that we need to talk about. And I'm not sure how much further down the trail we're 41 minutes in. I've got 20, so let me move quickly here. So here's the weekly chart on the 10-year. That was very interesting because I've been talking a bit about potential of coming back and challenging the 4% level, but all of a sudden, what do we get here? We got new Fibonacci targets to the upside, but we've got mixed results from the PPM1, but PPM2 is showing a steady where it's likely to turn up. So check these numbers out. I think these are pretty interesting. 4.57, 4.78, and 4.90. So I kind of blew off, somebody said hyperinflation earlier. I don't know that it's going to be inflationary driven, but all of a sudden this market's starting to turn. And I know I put out I still think right where we're trading right now at the 433 level, that is really key. We're closed at 4.329 today. 433 is a big number. We start to get through that. We're already looking at the 10-year. We're up at STX. The volatility has collapsed substantially. And so, but the positive momentum, we're looking at PPM1. This is weekly. PPM1 is now at 0.40. PPM2 is still negative, so it's flat running through the bottom here. But we're already printing, if we look at the market grid right now, 4.367 is RXT. So we'll look at that number. But these new calcs that just came in this week are somewhat concerning, which disrupts my entire scenario that I was talking about as we go back a few weeks ago. And my expectation here is that that the algos are looking to fade in the next couple of weeks. So we'll probably test some of these resistance levels from a yield standpoint and support levels as far as the bond goes. But we're looking at a potential coming back into this range, back into 425, 420. It always feels like it's going to go up forever when you get there. I'm just honoring and acknowledging these Fibonacci targets on the upside. Let's go to a monthly. And I think monthly there's a new monthly target, which are absolutely insane. So I'll mention them anyway. 5.55, 6.20, and 6.6. That's these green dots. Let me see these three dots. They came in today. But what we're seeing is something opposite. And I'm teaching you folks that have the indicators that what you need to do here is look at the PPMs, look at the slopes. While we got this pattern to trigger, it doesn't, when you start to see the algorithms and the moving averages suggesting that the opposite, then you're probably going to, this could be an island, what I call an island projection. Otherwise, it gets one bar projection, it goes away the next month. And we won't know that for 30 days, 31 days, right, until the end of April. So, but the algos are suggesting on a monthly basis that we're going to see some backfilling here, and most likely I'm just looking at the averages here. Bear with me one second while I bring this up. 3.35 is extreme, and we're trading up at right now the 4.25. We're trading just above it. If we look at the monthly market grid, we can come up with some numbers at R2. Well, actually, R1, which is where we're trading right now, and that's been slightly exceeded, is 4.29. We'll call it 430. R2 is 439, and then we got R3 at 4.49, which is that 450 number. I mentioned it, and then we've got these fib targets. I think we stall within the market grid range, probably where we are right now, maybe one tick up, which would be R2, 4.39, we'll call it 4.4. That would be an extreme, and I think you'll see a rejection. There's going to be some folks that are going to want to own those things, and you'll see some buying come in to the bonds at that time. All right, so let's see what time we got here. I'm going to try to just slam through in the next 12 minutes. I'm going to go nonstop here, and we're just going to go right through crude oil, gold, and Bitcoin. I will stick with this. This is a quarterly chart on crude. Really just locked in a range here. I've been talking about this 90, 70, 75 range is it. Let's come down to a monthly graph. New fib targets on the upside here for crude. You see upward slope. We also have positive PPM, so I would lean a little bit toward getting up to these numbers here. And let me just bring them up so we can. Yeah, so high target 1, 99.10. High target 2, 111. I would say this would be a retest of these highs that we made over here this is a monthly chart now that we made back in September. That would put us back at 95.02. That'd be a slightly higher high in this pattern. But we're definitely looking at some positive flow. PPM2 is looking to increase, and that's going to keep really good solid support between 85 and 82 here. And then ultimately, the pattern looks like it's going to continue to go up. Maybe we get to 98 or something like that. All right, let's go to weekly. Weekly is looking at a flattening out period, some more consolidation, and then down the road, there's been a decent angle attack to the upside. This is going to change as we get more. If we do stay flat here, we'll probably see these upward ranges moderate a little bit from as far as the projections go, but I would expect that we're going to just trade in this ranges. Extreme downside, probably around 80, and on the upside, we're looking at around 86, 88, and then the potential getting up into the 90s. But for right now, I think we're just going to continue to just grind out there. All right, so I've got gold up here. We've got some new fib targets that came out a couple weeks ago on gold, and we're looking at the potential here for 23.35, 24.50, and 25.28. These are new fib targets on the upside, and we look at the PPMs. They're still positive, very positive actually, off of this surge that we got over the last several weeks. And so all the PPMs are going to stay well within trend range. This angle of attack is going to stay positive. It's interesting because here we are on day one of the new week, and we're almost trading up at the RTX levels already. The high was 2286, and we're looking at 2291 is R3, and RXT is 2307. So we could get into a little bit of in the frothy range here from the standpoint of that viewpoint. Let's go to a monthly, and there's some big numbers coming out, and this goes back several months ago. The fib targets on the upside are at 2579, 2469, and 2290. I'm sorry. I got them backwards. 2290, 2469, and 2579. And so we're looking at, and we're still looking at monthly bullishness from a momentum standpoint to be really solid. So it looks like there's more upside here for gold on a monthly basis. I don't know what happens if we go into quarterly. Yeah, there's actually a fair amount of data here. Let me flash over here real quick. Yeah, so there's enough data here for the quarterly, and you can see even on a quarterly basis, there's even higher targets here. Let me bring that up. There's three minimum target, 25.29. We're looking at 28.85 and 31.05, and this is possibly what we've seen here. This will be interesting. I'm going to draw this in real quick. So we got a possible 1-2 here. This was a wave 3. We're just going to simplify it, A, B, C. Then we got a 1-2, and this is being projected for wave 3, and this is on a quarterly basis. So all of a sudden you can see right here, I'm just going to draw an arrow up, straight up. That's 2025 right there. Here's 2027 out here. So this is probably going to take a little while, but it does look like we've got that would be the vertical projection here. Let me just take this off. That this angle of attack is pretty solid, and we do have an upward expansion of volatility. So I would watch a couple numbers here from the standpoint of where gold is likely to do is probably R1 is 2296, 2361 is most likely going to be around the extremes. The next number up is 2426. On the downside, S1 is 2180. That would be a screaming buy if you were to see that. All right, we look at Bitcoin. I got a monthly chart up here. Pretty amazing. I remember way back in 23, March, a year ago, mentioning these Fibonacci targets, which seemed somewhat ridiculous at the time. They were for a move. The first one was for a move up to 55, then the second two were 55.40, and then 70,972, and then 80,543. So these are very big numbers, and we basically have satisfied this. And it's almost like buying ahead of the halving event. Maybe that's what's going on here. But we back up and go to weekly. I still think we're locked in this weekly sideways range with this upward slope here. And the upward slope comes in at around 60,338 for this month. But we look at market grid numbers here. We're looking at probably somewhere between 67 S2 would be an extreme on the downside. So S2, which would be 67,754. We traded down to 60,000. The extreme here for this week doesn't even get close to that. 67,754, S3, 65,761, and then basically 64,000 would be the extreme for the week. On the upside, you're still looking at potential for a 75, 77 print, which would satisfy these upward fib targets. You can find them here up to 78, we'll call it 200. That's the top fib target, and that's within the weekly market grid, so that's very, very likely to occur. All right, folks, right on the mark, about 3 minutes to go. I just want to answer a question somebody brought up about the yen. And are they going to start selling bonds to get the yen up? It's possible. I mean, the yen is not getting hammered. I've been watching it fairly closely around this 151 level, a dollar yen. We'll see if we can get much above that, whether they start to sell securities or not, selling U.S. securities. Maybe that happens. We'll see. We'll watch that pretty closely. Maybe that's what would spike yields up to these levels that I mentioned in the Fibonacci targets. So it's interesting because they've been lagging so far behind, they meaning the BOJ, the Bank of Japan, and they've been lagging a lot behind what everybody else in the world is doing. They finally raised rates to plus 0.1. So it's not really a big number, but it is a shift in policy. And whether or not they start to sell things off to protect the yen, we'll have to see what happens there. They're probably and I remember talking about this sometime last year. We got really focused, and the yen kind of spiked out. There was a big flush on the upside for the dollar yen, and a flush on the downside for the yen, and it came right back. And they didn't really make any policy changes. Now that they have made the policy change, there might be something there. I'm just looking at a couple comments here, what we said. Yeah, so usually when you see the everybody I can see, as I covered tonight, I can see some minor consolidation here, but as far as a pullback, I don't think that's likely at this point. I think there's still a very solid backdrop, and that's primarily based on the database that I run and what I'm seeing in the output as far as the day-to-day. If something happens, we start to see the short-term database crumble below 42%, that would put me on alert for maybe a 5 or possibly a 10% correction. But I do think we get consolidation. We definitely get this market to just flatten out for a little bit. It would be too easy to be able to sell here and make money. So it's got to be harder than that. Probably a spike of some sort. Yeah, I'm just looking at a couple more comments here. Yeah, I wish we could. I'll tell you what, let's go through XLE. Tomorrow is basically Tuesday, where I cover individual stocks. Let's go through, just remind me, make sure you come today for tomorrow's video, and we'll go through basically the XLE hack that I did on our Portfolio Expert software, and we'll go through some of the stocks. And so bring your stock list with you tomorrow, and we'll go through all of that stuff. So once again, the Substack will be out tonight. I'll cover a lot of these duration issues and things that I talked about tonight. I'll try to consolidate this into the newsletter tonight. So kendallreport.com/newsletter or kendallreport.substack, $8 a month. Sign up. It supports a lot of stuff that we do here. So thanks again for watching, and we'll see you tomorrow, same time, 7 p.m. Eastern.